and running. Um, so yeah, I mean, what is the big story today? It's Nvidia. We talked about Nvidia yesterday. Whoopity do. We're gonna take a look at what Nvidia announced and why this may be the death knell to Nvidia. I mean, what was the big takeaway? What is the elephant in the room with regards to Nvidia, and where is the real opportunity? And so we'll kind of look at that, and we'll look at the console today. There's a sleight of hand, right? We're focused on a stock that, for all intents and purposes, may be dead for now, and we're missing maybe real opportunities because we're getting focused on what everyone else is focused on. So anyway, we'll kind of talk about those three dynamics here. So let's take a look at the broader market right now. We're going to take a look at the SPX, and you'll see that we're edging higher. As we look at our sector performance, we got healthcare lagging. We've got gold leading. So that really tells you something, doesn't it? Gold is leading today. The S&P's off about a third, a tenth of a percent, 14 hundredths of a percent. Point being is that the market, for all intents and purposes, is down. And we're seeing today, by virtue of gold going higher, the dollar's weaker today. And unfortunately, yesterday, I'm kind of in a position where you got to kind of manage stuff, right? I mean, there's trade management and there's portfolio management. Two very different things. So we took off SLV yesterday for a small gain. Again, just worried about what today's hold. I'm like, I want to lower my risk. And if I'm going to lower my risk, I'm not going to take losses. I'm going to take profits. So we took a profit on SLV, albeit small, just for the express purpose of today, there could be some risk going on today. Again, Nvidia's earnings could create some risk. So we made about 15% on SLV. Not great, but better than a sharp stick in the eye. Now I'm regretting it today, but again, I don't really worry about it. It's up 1.25%. Yeah, we could have made 30% instead of 15. So either scenario, silver could be down tomorrow, whatever. The point is that today the market is not on great footing. Yes, technology's up there. We're up 0.5%. Where is Nvidia right now? Everyone's saying, oh, Nvidia's green. Yesterday, I kind of laid out the scenario for Nvidia. How we doing, Rio? We got Randy in the house today. We got Ted. We got Mari here as well. Good to have you folks. So yesterday I laid out a scenario. If Nvidia beats, probably the best trade would be a at the money butterfly. If they miss, we'd probably be looking for maybe a 2 standard deviation move to the downside. Nvidia beat $1.05 to 92 cents. Did Nvidia beat on its revenue? What do you think? How are we doing, Joe? Up? So Nvidia beat on their earnings. They beat analyst estimates. Did they beat revenue estimates? What do we think? Did they beat revenue estimates? Just headline, top line revenue. Yes. So they beat. Oops, let me change that color. Let's go red. So they beat EPS. They beat revenue. What about guidance? Was guidance higher or lower than expectations? They did miss on revenue from data center was there. Guidance was pretty much in line, right? So they give kind of a range of guidance. That average was pretty much in line with expectations, right? I mean, this was not a bad report, but why is Nvidia down? They're looking at data 7 revenue. Now, all the bulls out there are saying, yeah, but they didn't sell any H2O processors to China. Did a 182.50. Awesome. I bet that paid off, Timothy. Let us know what you made on that one. Growth rate. So operating margins, gross margins. I mean, maybe slowing down there a little bit, but everyone's pointing to the fact that, yeah, they didn't sell any chips to China. That's why things are slowing a little bit. All you got to, and their guidance isn't factoring in chip sales to China. Where does Nvidia get 40% of their revenue? Does anyone know? Where does Nvidia get 40% of their revenue? Not Mag 7. Close though. It's going to be a subset of the Mag 7. Very likely, right? Well, it is. Meta, yeah. So they don't disclose this, but Meta is probably definitely one of them. I'll say Tesla, meaning XAI, and then we've got Microsoft. I mean, those are the only three companies, but 40% of their revenue comes from two companies, right? And it's either Meta or Tesla, Meta or Microsoft. I'll guarantee Meta's in that list, but only two companies make up 40% of Nvidia's revenue. Two companies, okay? Now, with this though, Meta said something interesting about their data centers. They want to make it fungible. What is that? What does fungibility mean? We find this out with regards to like, giving money to nonprofits, right? Money is fungible. But when Meta or Zuckerberg says they want their data, they want their investment in this data, again, in AI to be fungible, what does that exactly mean? It means that they got to be able to use different types of, they got to be able to adapt, right? They can't just be locked into Nvidia. They can't just be locked into AMD. AMD, frankly, probably produce in some ways per processor, a slightly better advantage. But the problem with that is that AMDs you can't daisy chain them together like you can Nvidia. But the whole GPU concept and the TPU concept, why isn't Google one of those top two? Nobody said that Google is one of the top two. Google's going a different route. Okay, we'll see you, Daniel. Okay, so the point is this, is that is Nvidia in the best position right now? Nvidia also revealed what companies they're invested in. Did you know that 90% of Nvidia's investments, over 91%, is in CRWV, in Coreweave? 65% gain. Awesome. 90%, I think 91.6% of Nvidia's investment in other companies in Coreweave. Let me show you Coreweave, by the way. Let me show you Coreweave. So we're going to go CRWV. And this is nuts. When you look at this, it's crazy. So let's go to financials here. We're going to look at revenue. Now, this company, by the way, is a 3.5. Sorry, going back here. This company is a $47 billion company. $47 billion. Now, what is their price to sales? Price to sales. What are you paying for that? Where's the valuation ratio? Price to sales. That's not on there. Let's go here. CRWV. What is their price to sales on Coreweave? So we'll look right here. Price to revenue. That's EV to revenue. Sorry. Price to sales ratio is 11.11. Okay. There's no PE. There's no forward PE. Why? There's no earnings. Okay. So no earnings. So again, you're paying 11 times revenues for Coreweave. Okay. Now their profit margins are minus 28%. Their operating margins are 3.9%. So once you get through costs of goods sold and you get to sales and general administrative expenses, their operating margin only 4%. Then you start to factor in taxes and other things. All of a sudden we're down to minus 28%. This company's, again, they're not making money, right? Let's go to financials here. So again, $48 billion company. They're generating trailing 12 months, $3.5 billion in revenue. So that's why we're getting the 11 multiple on price to sales. 48 divided by 3.5, that gets you around 11. All right, okay, that's fine. So $3.5 billion in revenue. You look right in here and you get down to what? Basic EPS, they're losing $2.26. Anytime you see a company losing money, you want to check to see cash flows because those are more significant than earnings. So then we come up here, we look at cash flow. Okay. And we're looking at operating cash flow, 637 million. Well, how do we go from net income of, what is net income down here? Net income of minus $1.1 billion. And suddenly we have 600 million in cash flow, operating cash flow. Well, let's break this down. So you get the big negative here, right? The starting point of net income, you get operating gains and losses. So we had operating loss of 334 million, depreciation and amortization of $1.6 billion. So again, they're CapEx heavy, right? Big depreciation. They're probably front loading this as much as they can. And they've got $344 million in stock-based compensation. So 10% of their revenue is stock-based compensation. For a company that doesn't make money and only generating 637 million in operating cash flow, they're taking half of it in stock-based compensation. But this is where things get screwy, right? 637 million in cash flow, operating cash flow. All right, so they're bringing in cash. Free cash flow of minus $7.9 billion. This is in the trailing 12 months and is probably not counting. Well, actually, that's Nvidia. But Coreweave already had their earnings, I believe. Minus $7.9 billion in free cash flow. Well, how do we get from this to that? Look at investing cash flow right here, right? We're looking at CapEx spending, net PPE&E purchase, property, plant, and equipment, minus $8.5 billion. So we go from a paltry 637 million. They're investing $8.5 billion. So we're generating negative 7.9 billion in free cash flow. So we've got the two big names. 40% of Nvidia's revenue comes down to what? A combination of either Meta and Tesla or Meta and Microsoft. One of those two. What are they buying? What are they buying for $8.5 billion? Does anyone know? What are they buying for $8.5 billion? What does this company actually do? Let's go to profile. And this will give us a description here, right? Key executives, corporate description here. Operates a cloud platform that provides scaling support, acceleration for Gen AI. Yes, they are buying cores, but what are they doing? They're again hyperscaler, right? That's compute. They are compute. What do they need to compute? They need chips. Whose chips are they buying, by the way? Whose chips are they likely buying in this case? CPU compute, storage services, networks, all this stuff, right? GPU compute. Whose chips are they buying? Well, do you think that 91% of Nvidia's investment is in Coreweave, right? They're buying Nvidia chips. So let's go back here to financials. Financials. I don't stutter there. Geez. Financials. How are they affording this? This company's got no money, right? This company's got no money. Net issuance and payments of debt. This is a positive number here, right? Positive number. Oops, let me go to different color. This is a positive number, and this is a positive number. Okay? So they borrowed in the trailing 12 months about $1.5 billion. No, sorry. They issued $1.5 billion in stock, and they borrowed $7.5 billion in debt. The prior year, 6.5. Well, that's trailing 12 months there. So that may and corporate. And we're We're almost done there. Right? This does incorporate some of that. $1.4 billion there, 86 million there. What is Coreweave doing? They're borrowing tons of money and issuing tons of stock to do what? To buy what? We saw it up here, $8.5 billion in CapEx. And that's not even the all stock acquisition. Of course, that's still in the works right here, right? They didn't pay off loans. This is cash inflow, right? If they're paying off loans, that would be a negative. Since it's a positive number, that's a cash inflow. That's the amount of debt they're issuing in the last 12 months. And they issued $1.4 billion dollars in stock over the last 12 months. For a company that's generating this, how many of I have never seen something like this before. When I was looking at this morning, I was aghast. How in the world are they able to borrow $8.5 billion to invest in capital expenditures when they're generating so little revenue and operating cash flows? How is that possible? Do you think in the Nvidia investment might help them in that process? And then they're out there buying cores, all stock deal, right? Meanwhile, they're diluting the shares by issuing more shares, and they're going to have to do it indefinitely, right? Coreweave, this isn't going to stop now, right? 90%, again, Nvidia, 90% of their investment is in, of all the companies out there, is in Coreweave. Do you think Coreweave's going to end their CapEx spending next year? I highly, highly doubt it. Here's a company in Core Scientific. They generated $12 million in operating cash flow. My goodness, what do they generate in revenues? $348 million in revenue. What does Core Scientific do? You come down here. It's a digital asset mining service. Do they make anything? What is its valuation here? It's a $4 billion company. And how much revenue is it generating? Let's go back to financials here. $348 million. Okay, that's a massive amount. Why in the world would Coreweave want to buy Core Scientific? How much cash does this company have? Let's look at the balance sheet here. Total assets, $1.5 billion. Current assets, cash and cash equivalent, $836 million. Partying like it's 1999, right? You just don't see this, folks. This is highly irresponsible on the part of Coreweave. But so 40% of Nvidia's revenue comes from two companies. And then you got companies like Coreweave buying about $8 billion, $9 billion a year in CapEx. I mean, how much of that is from Nvidia? And Nvidia is probably the biggest investor in Coreweave, and it is the single biggest investment of Nvidia. So the big takeaway today, and we're going to circle back to Nvidia here in just a second. The big takeaway from Nvidia today was that, well, we didn't include China. Well, guess what? How much does $2.8 billion missing in potential revenue in China really mean? Not a whole lot, right? On the margin, it means a lot. All it takes is Meta or Microsoft or Tesla pulling it back a little bit in their CapEx spending, and that wipes out China, by the way. Yeah, so Coreweave is buying cores. So if you didn't know, so Coreweave, just to be clear, Coreweave is buying cores. All stock deal. Okay, all stock deal. So Core Scientific's like, hey, we're being undervalued because Coreweave's stock price has gone down since the announced acquisition. So if you look at Coreweave, CRWV, they announced the acquisition back here, right? All stock deal. And all of a sudden they're down. But again, what we're talking about here, right? What we're talking about with Coreweave is that this is a company that, how in the world are they able to borrow $8 billion and sell $1.7 billion in stock? And this stock is not trading down here. It's pretty crazy, isn't it? But you can see how we're basically picked them up a lot of cash. Did it? Did it pick them up a lot of cash? So let's look at Course. Let's go back to financials. How much cash does Course have? Oops, wrong one. Balance sheet right here. How much cash does Coreweave have? Current assets, cash and cash equivalents, about 836 million. That's not a bad amount of cash, right? So they might have done it for the cash, $836 million. Where did they get the 836 million? We jumped here, right? 23 to 24. That's the fiscal year. It's not showing the current trailing 12 months. But where did they get the cash? Let's come in here. Because we want to look at net. Well, let's look right here. We'll go right here. What is the net cash at Coreweave? Because that's a big jump, right? Not Core, of course. That's a big jump in cash for 1 year. Huh. Did the deal already go through? Maybe I missed it. Where did they get the cash? So we're going to look over here. Cash to debt. So let's go down here. So they from 23 to 24, they raised about 800. So about cash here was 50 million, jumped here, but debt 866 million to 12. So they borrowed about $350 million. What about, let's to go back here. Let's look at cash flow. How many shares did they issue there? Are we on course of course? So they borrowed $769 million in the trailing 12 months. That does include some of the prior here too, right? Net common size, so not much there, but all the cash was what? It was borrowed, right? So they borrowed. So when you think about enterprise value is what? EV equals the market cap of the company. Now I'm forgetting it. Minus debt plus cash. Essentially, this is wiped out, right? Any cash you have is basically offset by debt. So again, similar scenario, right? Somebody lent Core's money, and then all of a sudden, Coreweave issues shares of stock, and they do an all-stock deal to buy Core Scientific for their cash that's borrowed anyway. The net cash hasn't really changed at all. Not really, right? Not really. And so again, you look at the so if you look at the net cash here, right? That doesn't seem right though. 836 million, 1.2 billion. Because they issued about 700 million. So I don't know, whatever. But the point is, they borrowed they borrowed that money, right? They did not make that money. So again, it's just more just kind of financial gimmicks, right? Financial gimmicks. Now let's take a look at Nvidia. Let's take a closer look here, because again, this is the elephant in the room. Everyone wants to talk Nvidia today. Okay? Everyone wants to talk Nvidia. Why? I get it. It's the biggest company out there. But the elephant in the room with Nvidia is they just announced a $60 billion stock buyback. Is that big or small or somewhere in between for Nvidia? Think about it for a second. Okay. So I'm going to look at Apple for just a second. We're going to go to 30-year financials. We're going to look at debt issuance. Apple in the past, anytime they needed money under Jobs, what they would do is they would sell shares, right? They would just issue more shares. They didn't go into debt, right? They had zero debt before Cook. And Cook basically stifled innovation and engaged in just basically trying to please big investors, knowing that basically their goose was cooked, right? There was no major product development that was going to change the company. It was basically just, we just got to survive. We want people to own our stock. Okay. So let's look at debt to equity. So you go back 2013, very, very little debt, right? And then we see in 14 right here, debt to equity. And let's go to cash flow statement. Where's the cash flow? Income, balance sheet. So here we got, let's go total earned assets, liabilities. We start to see long-term debt. You'll see in 2013, we really start to see it ramp up here, right? And we've been hovering around $100 billion. They paid it down a little bit to 82. But you'll see back here 13, 14, and really in 15, they amplify, basically, we're saying, hey, we're going to buy back $53 billion. Oh, it's actually over 50, but then it started really kicking in with stock buybacks and there, let's see if there's a cash flow. That's probably not. Cash flow statement. Issuance of debt, repurchase of stock. So right here, 2013, 2014, you see really start to kick in, right? As far as Apple buying back stock. Why did they do that? Because at the end of the day, innovation was over at Apple, right? What product has Apple really developed since 2013? Not a whole lot, right? So let's look back at 2013 and see how Apple did. And I'm going to come up here. So 2013 is right about right here, right? We're heading into 2013. Price on a split adjusted basis was $26 at its peak in 2012. The stock price virtually did nothing for what? Till about 2016. Why did the company buy back that much stock over the several years? How much would the stock have been down if Apple had not bought back, repurchased, did not, how much would Apple have gone down? 22 billion, 45 billion, 35 billion, 29, 32, 72. Think about the tens of billions, a couple $100 billion over the course of the next, 6 years till September of 2018. So from right here to 2018, the stock ended up not quite doubling in price from its peak here, but close. But really was flat on its back till the end of 16. 17 was a phenomenal year into early 18. And then we saw the sell-off in late 2018. Okay. The low point right there was $35. The high point here was around 27. So think about it for a second. Why did Apple do that? Because there's a point when you start to see the signs on the wall of lower growth. How do you entice people to hold your stock? And I get it. People are saying H2O, water, right? H2O, they're gonna sell it to China. Well, guess what? Their agreement is they're gonna have to give the US a cut if they're gonna let them through that, right? So my point is just, this is a rather significant development today on the part of Nvidia. Now, let's look at the size of this, okay? Let's look at total revenue. Total revenue in the last 12 months is $148 billion, okay? Drop my phone. Got my calculator. Let me grab it. Okay? $148 billion. And I know some of you guys aren't going to like this, right? 60 billion divided by 148. They're going to put back 40% of their revenue in stock buyback in the trailing 12 months, right? Now, it may not include today's announcement, but we're talking about 40% of their revenue to buy back shares of stock. Okay, well, how much cash does this company have? Well, let's go to the balance sheet. Again, trailing 12 months, well, the last we have is January, right? We don't have this number right now. But if we look at total assets, current assets, how much cash does this company have? $43 billion. They do not have the cash to do a $60 billion buyback, and that would wipe out their entire cash reserves. Current assets are $80 billion, and $23 billion of which, and they think their receivables have actually increased more. But the point is that $43 billion, and again, we take inventory. So if they clear out their inventory, again, inventory's gone up. So if they're able to sell that inventory, those the bump up in inventory, their HCO, they're okay, they're gonna sell it to China. People are anticipating that. Maybe, maybe not. But they've got $43 billion in cash. They do not have the cash to do it. Even if you throw in receivables, again, this is not today's number. These numbers, that number's gonna be higher. That number's probably a little bit higher. They do not have the cash to do it. 40% of revenue as of the January 31st earnings announcement. You take all of their cash. What about their cash flow? How much cash flow do they generate in a year? $76 billion. Okay, now that may go up, but in the trailing 12 months, $76 billion. Now, operating cash flow is one number, but you still have to invest in CapEx, right? How much are they investing in capital? And net PP&E, only $4 billion. Okay, so what are they left with free cash flow? $72 billion. So why is the net PP&E so low for Nvidia? Yeah, it's tiny for Apple. Why is it so small for Nvidia? Why is Nvidia's CapEx so small? Net property, plant equipment. Why is it so small? Previously $1 billion. Why is this so small? There's a secret there. They don't produce anything, right? They don't manufacture anything, right? So all they do is design. They design. Who manufactures? They do design. They don't even manufacture their product, right? They don't manufacture. So yes, they're net PP and light. So do they have the ability to pay 60 billion? Free cash flow at $72 billion. Yes, it's there. But they're paying out a very significant percentage of that, aren't they? Now, if all of a sudden we start to see a little bit of a turn in some of the investment in AI, because basically what they announced was that Nvidia, and basically saying that there's going to be about $1 trillion in CapEx investment in AI. $1 trillion, right? How much revenue is generated off of that 1 trillion investment a year? How much revenue is generated currently off of that $1 trillion investment per year? Does anyone know? It was either 20 or 28. I'll give it the benefit of $28 billion. 1 trillion investment for 28 billion. Okay. So 28 billion on 1 trillion. It's not even 78% return on it, is it? 28 divided by 1. That's 2.8%. So this is a very, very small return. So the question is, how long are investors going to keep buying Meta and Microsoft and Tesla stock if they're investing 1 trillion for that small of a return? I mean, how much real profits are going to be generated off AI? That's a tough one, right? Very, very difficult to try to calculate. How long are investors? So 40% of their revenue is derived from two people, two companies. We've kind of narrowed it's probably one of three, right? It's either XAI, it's Meta, or it's Microsoft. Meta's probably in there because they're drunken sailors in terms of spending. And 24%, I believe it's 24% from one company, 16% from another company. Okay? So huge, huge exposure. So, and then we look at the valuation. So let's go back to statistics here. Let's use this up here. Let's go up here. So we're gonna look at NVDA. So does Nvidia have 60 billion in cash over the next year to be able to buy back stock without going to debt? Probably, right? That's probably good. Likely they'll have enough cash, free cash flow. That's money that's available to be distributed to investors, but they're giving all of it. And this is probably a bit of demand from the investors in this company, right? But you can see, gross margins. Again, gross margins so high because they don't manufacture anything. Operating margins basically count SG&A, selling and general administrative expenses. You can see this is it's undervalued because the growth trajectory is so high. But then you come down here and you look at a lot of the metrics. Forward P, taking into account next year's earnings, 40 times earnings, 57 times current. PEG ratio, well, PEG price sales, 29 times. Very little equity in this company, right? Very little revenue in this company for the price that you're paying. Very little equity in this company. That's why the price to book so high. Equities, assets minus liabilities. EV to EBITDA, 47 times. We have priced in substantial future growth in all these metrics. We've brought them back to the present. It's not without its risk, but the signal that we're getting today, the elephant in the room, is the fact that, look, they have huge exposure to two companies. They're investing in companies like Coreweave, and who knows how many are out there like that, or they're likely financing their purchase. I've talked about this before. Who's the bank in Coreweave, by the way? It's probably Nvidia. Is that a good investment in Coreweave? A company is generating so little in terms of revenue and cash? No, it's really lopsided. But guess what? Nvidia is probably the company that's financing those CapEx, those capital expenditures. So my take on Nvidia is this, and we'll circle around to the opportunity, Nvidia. Now, we'll see what happens, but we look back here on Nvidia. When did the long-term trend break on Nvidia? When did the long-term trend break on Nvidia? Because we have to understand the driver, right? What drove Nvidia from $40 to 140? What was the driver there? Rosario says they're their own cut. Yeah, that's true, right? What was the driver? Demand for what? What happened going into 2024? We had a really uncertain economic outlook. Okay? Demand for stock. But what was the driver for demand? You saw this in the options market and you saw it break right there. Because everyone's looking at this and looking back to here and thinking, oh, we're just recreating this. The reality is they've not recreated it. We're just seeing fewer and fewer, weaker and weaker hands entering Nvidia right now. The promise of an AI chip, but yes, so that's kind of the periphery, right? But what was the primary driver? It's called dispersion. Okay? Don talks about this. This is one of the premises for the catapult trade. Dispersion. Right here, and you saw it happen in the options market in real time. You saw it playing out. You saw the call volatility shoot through the roof. As you moved out of the money on the call side, the implied volatility came ramping up. The dispersion trade. Everyone on the institutional side made a bet. They made a bet that Nvidia was going to outperform the S&P 500. And they said, I don't know anything else. But all I know is Nvidia is going to outperform the S&P 500. And it became one of the most crowded trades ever. Okay? And so what happens is that they go out there and they're buying calls. And then they're selling what? They're selling puts on the S&P. So what's happening simultaneously? They're driving down the VIX. They're suppressing volatility in the market, and they're using that premium to buy out of the money calls on Nvidia. This is what happened back here. So again, there's a mechanical process that created higher prices. And yes, we can say, oh, it's all about AI, right? But that's not what caused the stock to go from 40 to 140. That fever broke on June 20th, right there. You saw in the options market during this last little leg right here, those last few weeks, significant put option activity coming into Nvidia. And then you saw the fever break in the options market right there in real time. Go back and watch Don's session on June 20th, 2024. And yes, we have that recording. We record, as Don says, everything. That is the point when it broke. But you're saying, well, we just achieved a new all-time high in the last what? In the last few weeks. Do we have the same conditions present? Let's go take a look at the trade tab here. We're going to go 30, we'll go out 50 days. We're going to look at the implied volatility and we're going to assess, do we have the same type of dispersion trade playing out here in real time? No, we don't. I mean, we see volatility rise way, way out of the money out here, but here you're looking at 40 delta-ish, volatility still falling. Okay. What are institutions doing? They're selling this and they're buying that. Why are they doing that? Why would institutions be selling calls and buying puts on Nvidia? It's called a hedge, right? They're hedging their equity. You have to own Nvidia. You have to own Nvidia, right? You're stupid if you don't. It's the biggest market cap company. Every fund out there owns it. Good luck finding a style fund that doesn't own Nvidia or Apple or Microsoft, right? All these style funds just still own the Max 7. Okay? This is a hedge. We're not seeing the same conditions present that drove the price up here. All we have now is the memory of what happened in the past, and we don't have any of the conditions present that took the stock from 40 to 140. And guess what? Right now, we're trading $40 higher, right? We're trading $40, approximately $40 higher than we did in June 20 of that period. Oops. Let me clear it off. Where's the AC on this thing? $40 divided by 140. We're up 30% in how long? We're up 30% in the last year and a half. A little less than a half. Year and 3 months. 30% in the last year to 3 months. Yes, we sold off and then we got back to square and we finally got this last gas breakout led by who? Retail fervor is definitely in this. We're up down 0.84% today. So my point in sharing this is, look, there is an elephant in the room with today's announcement of a $60 billion buyback is really puts in squarely in focus the issues surrounding Nvidia. And it doesn't mean it can't continue to push that envelope of valuation. It's possible. But we have to understand the risks here. Now, at the same time, we're getting a lot of news out of China regarding what? AI advancements. Are they using NVIDIA processors? Are they still selling through backdoors in Singapore or Malaysia, wherever? Probably. Is the door going to suddenly open for NVIDIA in China? Well, it's only $2.8 billion that we're missing in sales. That's a drop in the bucket compared to what they're selling to Meta. Yes, it helps on the margin, but it's not a profound source of revenue for NVIDIA, which is kind of interesting. So when we start to think about, well, what is the opportunity out there? I'm trying to find. So in China, what are the AI companies that could buy NVIDIA chips? Baidu is one of them, right? Baidu has a presence in AI. Baba has a presence in AI. But a lot of these web-based Chinese stocks took a hit with the tariff news from India. Okay, are they about to bottom and see a rally? Pinduoduo, Li Auto. Okay, Li Auto's having some volatility on its earnings. Guess what? If I bring up the console here, is there anything on Li Auto today? I'm gonna bring in LI. Let me clear this out. LI, Li Auto. What's going on Li? Swore I saw some earlier today. Maybe I didn't. Oh, there we go. Finally came through. Li Auto. They're selling puts. Oops. So what are we doing here in Li Auto today? They're selling puts and they're buying calls. See that? Selling puts, that's sell, and this is buy. Selling puts and buying calls. Yeah, you got your 10 cents. You've got HSAI, you got Futu, XPEV, Neo. All these companies are involved in AI in China. And guess what? Are they buying processors through other channels? Yes. If they are, that's not a source of future or additional revenue for Nvidia. But if they're developing processor GPU processing power outside of Nvidia, that's going to replace Nvidia, right? Meta says they want to remain fungible on their AI investment. Again, what does that mean? They've got to be able to plug in different technology to be able to find advancements in their ability to do what they need to do there. Searching for the word to use, I can't think of it. Okay, so I find this really interesting. Li Auto today, we're seeing some volatility. It's on the earnings, and guess what? They're buying Li Auto today. Now, Li Auto, is this a company that has potential? This is generally not a good company, right? This is generally not a good company in terms of we got a $23 billion market cap. But what this does have is generally has a relatively high amount of short interest. It doesn't. 5%. There's about $1 billion floats. That's decently high. 5.5%, 4 days. That's moderately high because this is not a low float stock. It used to be a lot higher. Not as high, but still elevated. That over 5% for 1 billion shares is there. Okay. Margins, return on assets, return on equity. There's leverage in this company, a lot of debt. Margins aren't amazing, right? So point being is that this is not a great fundamental company. But where are you going to look? And again, you look at something like K-Web, for example. K-Web, we're seeing a little bit of advance after that tariff hit yesterday. I'm hoping this thing closed the door. We went long K-Web last Friday. Then boom, the tariffs hit. The de minimis exception took an effect today, I believe. Could we close the gap up here, get to 39? So if you like Nvidia, you probably like Chinese AI stocks. That's worth surmising. But the sleight of hand is also the idea is that you're focused maybe in the area that may not present the greatest opportunity. So I'm going to clear this out. I'm going to show you a big block trade in a particular area of the market today. This may be the biggest opportunity in the next week out here, in the next few weeks out here. There could be the low-hanging fruit to make 70% pretty quickly in this. I don't know for sure. I don't. There is no certainty, only probabilities. But today what we're seeing is XLE, they're buying 80,000 puts. Now it was rolled up from a lower strike price to a higher strike price. 75 to 80. There were 80,000 contracts, and they did it as a debit. Doesn't matter, it's a roll, right? They're rolling that up. They're incurring cost in order to do it. They're buying 80,000 puts. Jan 16, 83s. Scroll down the list here, right? Oxy, 7,500. 18,000 traded right now, right? Buying, right? They're buying puts. Sorry, not calls. Buying puts on XLE. Buying puts on Oxy. There's also another one here, XOP. There may be even more now. Where's XOP? Probably past it. Or maybe at a different setting. XOP right here, buying the 125 puts, 4,250 contracts, and a couple of prints there on XOP. What else they're buying? I'm going to clear this out. We're going to look at Cenovus. You have to dig a little deeper to find Cenovus here. Cenovus, another energy company, buying 2,500. Well, actually, they bought 5,000, mostly at the ask here, near the ask of the December 1915 puts. What does this look like? So let's go to XLE. XLE is kind of picking up here. We're actually towards the high of the session. We're kind of dollar weakness helping it out here, right? But right now it's going on XLE. They're taking some swings to the downside in energy. I've seen this thing to get down here and I'm good. So Kirk, buybacks are not about market cap, just so you know. I mean, 60 billion on a $4 trillion stock is not, again, the impact on the prices, maybe that's what you're saying, could be relatively negligible. but on the margin, it does create some buying in there. But the risk to the balance sheet, again, is actually rather significant. So, but again, we're seeing again bearish activity coming to XLE right now. Are we at a short-term high rate? We were up about 6+% just in the last couple of weeks. Trading in a range right now. Don't know. Are we breaking out today? Maybe. We're kind of testing those highs, maybe through it. But we're seeing those prints come in today at or near the high currently in XLE, XOP, right? CVE and OXY. Could be breaking the horizontal channel. Absolutely could be. I don't really care about that too much. How frequently do stocks break resistance? So this has been tested once, twice, 3 times. We're kind of in that area. So if we think about we're coming up against resistance, how frequently does resistance break or support break, even with 3 or 4 tests? Probably a majority of the time, right? So the point is that support and resistance are probably more consequential in terms of creating exits than they are providing a significantly higher probability, right? The probability of success does depend on when you get out at a loss or a gain, the strategy, etc. But okay, maybe it's 50-50 we go up or down from this point. So if we throw in the resistance and the tests, maybe it's 55-45. But it breaks a lot. A very high percentage of the time, resistance or support breaks. Just the reality, right? Am I doing a GP session 2 p.m. Eastern time? Yeah. So we're promoting ghost prints out there for people that aren't members of TheoTrade. You may get it. You could show up if you want, but I'm going to go through some of the ghost prints in there. Similar presentation we did a couple weeks ago. But again, we're looking to add more. So again, we're doing this for we have like a pool. We might again we'll get some people there. Yeah, so Corey's coming on here in a few minutes to take over, and then I'm gonna hop over, and we're gonna introduce a whole new set of people that aren't exactly members. Although some of you guys maybe, unless you might have got an email, to Ghost Prints. So yes, that's the plan, DG. Anyway, so we're gonna talk XLE in there. So we're gonna show some current prints, but XLE just tells you, look, they're taking again. I like to find a theme. Today's theme is what? It's bearish energy, right? And again, we may go up another day. It's possible, but if I come in here and again I cleared out my settings here, but if I take this out, let's just look at some block trades. Is there any like significant interest from a block trade standpoint in AMD or the periphery here of let's go 1.5, 41 showing right now. So what do we got here, right? So let's look at the call side. On the call side, Nvidia calls 30,000, open interest was 19. So someone buying calls to Nvidia, absolutely they are. I would expect it. Nvidia is very actively traded, and that's all we got, right? With that kind of sizable block trade, we had 19,000 open. We jumped over to 30. There's at least 11,000 of a block trade in that. So they're buying Nvidia calls for next week's expiration. And we could absolutely see further continuation in Nvidia's movement. Do you want to bank on that? I don't know. Like for me, it's a really squishy middle right now in Nvidia. Okay. They did everything right and a $60 billion buyback. And at the end of the day, and there's excuses, it did not produce a positive result on the earnings. It was slightly tilted negative. All right, what else we got? From a big block to ASTS, we'll go figure. On ASTS, there's actually a two-sided trade ASTS. I've never seen this to this degree. Buying calls and buying puts. I mean, this has huge interest coming in here. Look at the very small, this big block trade coming in. 16, 17,000 contracts, right? They're buying what? They're buying a strangle They're buying the 50 and 43. What is it? I've never seen this on this kind of stocks. ASTS? Are you kidding me? This is crazy. They're buying. This stock has what kind of implied volatility? 79%. Average implied volatility in this one's 80%. And you're seeing this happen a fair bit in the last week or so. What does this tell you? It tells you that people think volatility in these stocks are low. So we have this curve that's assessing the probabilities, but what they're saying is the tails are really fat and they're two-sided. That 80% implied volatility is nothing, right? That this is cheap. We'll buy the 53s and they're going to do what? What was the other side of it? We're going to buy the 53s. We're going to buy the 43 puts. We're going to put on a strangle, $7 wide on a $50 stock, and it's cheap. Crazy to think about, right? But my assessment on these kind of high short interest stocks is that they frequently are cheap. They make moves you normally don't see, statistically speaking, or expected based on implied volatility. All right, folks, I got to pass the ball here. Corey's waiting in the wings, but I hope this has been helpful. Again, it doesn't mean you can't, there's not a bullish trade in Nvidia. I just showed you one, right? It just means there are risks. This was not the best announcement. The fact they announced a buyback, 60 billion, is problematic. But could we squeeze here a little bit higher? Sure we can. Could we go lower? Sure. But to me, that's more of a 50-50 bet than it is other areas where there might be a better probability. All right, folks. Corey, you want ready to take over? Let me just make you the host with the most.
Indeed, Brendan, already.
You are the host. So I'll stop and record. Stop and restart the recording. All right, see you, folks. Great to have you. See you back tomorrow. Thank you. Thanks, Corey.
Awesome, Brendan. We'll give about a minute to